Hey there, welcome to the channel. So today the dollar pops. All right, so today was really an interesting day in the markets today. So basically, if we look here, looking at the dollar just popped up. Look at that gap. Look at that huge gap, and it just popped up. And this is like on the Dixie, apparently is a 20-year high. So we had the dollar pop up. The other thing that we had happen is our interest rates continue to go down, and they actually went down significantly today, near 2.77%. So what is this telling us? Okay. And one more thing. We also had the SPY and the Qs do a reversal. In other words, they closed down, they opened up down here. They sold off a little more. So they open up over here, sell off a little more, and then close at the strong of the day, at the high of the day. So they actually had a decent reversal day. So what does this all mean? So what this means is that we've had a very interesting thing. We've had this jump to safety. So it seems that this is what's going on. The market has decided that, hey, we're in recession. So they finally have kind of listened to, the updates of, the Atlanta GDP that like, oh, it looks like we're in recession. They're finally kind of paying attention to things like copper that's just gotten the crap kicked out of it. And then today really crap kicked out of it again. We even have things like our wheat has been breaking down for the last month here, another commodity. And then today, the big one too is oil. Oil just got beat up today, -8%. And that kind of puts us in a situation with oil that it kind of broke that trend line and it just could not make it out of there. So what's going on then? It's very interesting. So what it seems that the market is, there's this run to safety. So one aspect of the run to safety is that the dollar goes up. Now, the dollar has already been going up for quite some time. So looking at a chart here, you can see that, since we put in this low in January of 2021, we've been going straight up. But we have kind of almost a blow off here. It's kind of popped out. And what's really interesting actually too, is it's kind of popped out above the high in 2020. Now, what happened in 2020 where the dollar spiked up and had this volatility over here? Well, that was a cerveza sickness over here. So what happens is that when we're looking at a recession and we're looking at all the problems that we have out there, Ukraine, food crisis, all this stuff going on, and inflation as well. When all that stuff's going on, at some point, it just, the market, there's this kind of run to safety. And so we can see it in the dollar. The dollar just spikes up like crazy. And that indicates that you're running to safety. Now, the other thing that you see as well is you see the 10-year yield drop down. So today it dropped down 2.7%. And we can see from a longer term chart that this is starting to looking like, at least in the near term, this is possibly topping out here. And like we talked about, maybe we're going to get head and shoulders, and maybe we're just going to break. So the point is, yields going down means that the price is going up. So what's interesting is it appears we have money coming into the dollar that's looking for safety. At the same time, that money is, or some of that money is flowing into bonds, into treasuries in particular, because it's going into bonds, dropping yields down. So that money is looking for safety. It doesn't care about negative yields on rates. It's just like, I don't want to lose principal. And in addition, it's the commodity part of the market has kind of apparently just looked at things and said, yeah, no, we're going into recession, or we are in recession. So then, and we can see dollar going up, finally putting that pressure on gold, and gold coming off. But what's interesting, if we go look at the market did a reversal today and actually ended up. And if we look at the market, if we look at the Qs, you can see that it was a reasonably strong day, even though the volume wasn't super great. And it's kind of interesting because these are kind of forming little W's, little very, very short-term W's. You have the situation here, you have this point right here, and, we're running up at it. So, I kind of wonder if we're going to get into a situation here where the market's going to go up for a little bit. Now, why would this make sense? If you're saying like, hey, the market decides that, oh, we're in a recession right now. So therefore, what's going to happen? So the market is deciding then it's going to kill all the commodity stuff, right? The dollar's going to go up, look for safety, going to put that money into bonds, sending rates down. The rates going down does kind of help the stock market in a way. But if we're going to recession, earnings should kind of be crappy and we should expect crappy earnings. So then stocks shouldn't go up. But why would stocks kind of go up? Well, the stock market seems to always be looking like way ahead, like two steps ahead. So, if you're looking at it, it's kind of like, okay, well, the market is saying like, okay, if we're going into recession, then hopefully that will cause the Fed to back off. And then, in terms of if the interest rates were going to go up to 5%, maybe now they only need to go up to 3% or something like that before inflation gets killed off. And so maybe that's what the market is starting to sniff out here. And it's kind of interesting too, because if you look at like ARK, this one had a strong day, 9% today. And this one is kind of set up. You see how this is kind of setting up? So if you look at it, it's like you have this resistance area here at right at 46. And now we're very close to it. Now, I don't know if this is going to break out, but there's a setup. You had a little bit of strong volume. You had this. And then the question is, well, how many people are short? There's probably a bunch of shorts in there. You had a low here. You held that low. You didn't break below it. You have a higher low here, and you're compressing up against this resistance at 46. So this might be an interesting one because if you break above the 46, the next resistance would be up here at about your 52. So you got 6 points. You got 6 points to run. So that's an interesting kind of setup. Now, do these companies are they going to do good magically? Some of them are probably going to go bankrupt in the recession that we're going to have. But right now, in terms of trading the stock, it probably doesn't matter at all. And then also with the IWM, all the indices kind of reversed today. So I think in conclusion, what we have is the market has suddenly decided, it's suddenly made this decision that, oh, we're in recession. Then the market immediately goes to buy mode because the market says, well, okay, if we're in recession, then that's going to bring the inflation down. And the Fed's going to realize if we're in a recession that they're going to have to pivot. And you have people out there talking about, well, they're going to have to pivot in the third quarter. And, the question is, when is the Fed going to pivot? By pivot, meaning stop, hold off on more interest rate increases, et cetera. And any of that stuff would kind of be bullish for the market. So really a surprising day today. And how fast things moved. And it will be interesting to kind of see tomorrow, on these rates, are we going to just crack through this 2.7 on the 10-year? Are we just going to crack right through there? Or are we going to get some kind of a support in this that would put some kind of another pattern up there? So we'll see about that. That's it for this one. Talk to you later. Bye.